Break the cycle of poverty, 6 financial habits to adopt now. Poverty is a cycle that can be difficult to break, but it is not impossible. By adopting good financial habits, you can take control of your financial future and work towards breaking the cycle of poverty for yourself and future generations. In this video, we will be discussing 8 financial habits that you can adopt now to help you break the cycle of poverty and achieve financial stability. Stop living paycheck to paycheck. One of the first steps to financial stability is to have a savings cushion to fall back on in case of emergencies. One of the most important financial habits to break the cycle of poverty is to stop living paycheck to paycheck. This means making sure you have enough money saved up to cover your expenses in case of emergencies or unexpected expenses. Living paycheck to paycheck can be stressful and precarious, as you are always one unexpected event away from financial disaster. It can also make it difficult to save for the future or invest in things that can improve your financial situation, like education or a home. To break the cycle of living paycheck to paycheck, you need to start saving. This means finding ways to cut back on unnecessary expenses and redirect that money towards your savings. It may also involve finding ways to increase your income, whether through negotiating a raise at your current job or exploring new job opportunities. It's important to have a budget in place to track your income and expenses and make sure you are living within your means. This can help you identify areas where you can cut back and areas where you can redirect those savings towards your emergency fund. Having an emergency fund is crucial for financial stability. Aim to save at least 3 to 6 months' worth of living expenses in case of unexpected events, like a job loss or medical emergency. This can provide a financial cushion to fall back on and help you avoid going into debt. Cutting back on unnecessary expenses is an important financial habit to break the cycle of poverty. This means taking a close look at your budget and identifying areas where you may be overspending. By cutting back on unnecessary expenses, you can free up more money to put towards your savings or pay off debt. This can help you build a stronger financial foundation and break the cycle of poverty. Remember, it's not about depriving yourself of the things you enjoy, but rather making mindful choices about your spending and redirecting that money towards your financial goals. Create a budget and stick to it. A budget is a crucial tool for breaking the cycle of poverty and achieving financial stability. It helps you track your income and expenses and make sure you are living within your means. To create a budget, start by listing all of your income sources and all of your fixed expenses, like rent or mortgage payments, insurance premiums, and student loan payments. Then, list your variable expenses, like groceries, transportation, and entertainment. Subtract your expenses from your income to see if you have any money left over. If you have a surplus, you can redirect that money towards your savings or paying off debt. If you have a deficit, you may need to cut back on some of your expenses or find ways to increase your income. It's important to review your budget regularly and make adjustments as needed. This can help you stay on track and reach your financial goals. Pay off high-interest debt. High-interest debt, like credit card debt, can be a financial drain. The higher the interest rate, the more you will end up paying over time. This can make it difficult to save or invest for the future. To break the cycle of high-interest debt, it's important to focus on paying it off as quickly as possible. One strategy is to pay off the debt with the highest interest rate first, as it will cost you the most in the long run. You may also want to consider consolidating your debt or transferring it to a credit card with a lower interest rate. Build up an emergency fund. An emergency fund is a savings account specifically set aside for unexpected expenses or emergencies. It can help you weather financial storms, like a job loss or unexpected medical expense, without having to go into debt. Aim to save enough to cover at least 3 to 6 months' worth of living expenses in your emergency fund. This can provide a financial cushion to fall back on and give you peace of mind knowing that you have a safety net in case of unexpected events. Invest in your education. Investing in your education can pay off in the long run in the form of higher earning potential. Whether it's going back to school to earn a degree or taking a course to learn a new skill, investing in your education can help you increase your knowledge and qualifications, making you more competitive in the job market. Diversify your investments. Diversification is key to minimizing risk in your investment portfolio. It's important to spread your investments out across different asset classes, like stocks, bonds, and cash, rather than putting all of your eggs in one basket. This can help you weather market fluctuations and reduce the risk of losing all of your investments at once. In conclusion, breaking the cycle of poverty requires a combination of financial habits and discipline. By following the tips outlined in this video, you can take control of your finances and work towards a more stable and secure financial future. This includes living within your means, cutting back on unnecessary expenses, creating a budget, paying off high-interest debt, building up an emergency fund, investing in your education, diversifying your investments, and seeking professional financial advice. Remember, it's not about becoming rich overnight, but rather about making smart financial decisions and building a strong foundation for the future. With dedication and hard work, you can break the cycle of poverty and achieve financial stability. So, these are the financial habits that you need to follow to break the cycle of poverty and lead a financially stable life.